Hey guys, good afternoon and welcome to MF Corner. I'm Pavitra, with me is Sonal, and today we're going to talk all about investing in a situation where valuations have run up a lot. This has been a year of super mid and small cap action. We've seen the small cap index is up 43%, mid caps are up 32%, and at the same time, large caps have not really done too much at all. So what does it mean for an investor, trying to get in when the sort of rally has been so imbalanced? What can you do now? How are fund managers looking for opportunities in this market? So Sonal, today we have a guest who's really been managing money for a long time, and I'm interested to hear what he has to say and which way he would approach it as an investor as well.
Oh yes, and at a time like this when we've seen such substantial moves, it's good to get an expert opinion as well. So let's welcome today our Srinivasan, who's the Chief Equity Investment Officer at SBI Mutual Funds. Mr. Srinivasan, good afternoon. Thank you so much for joining us. And we've been talking about markets still celebrating Diwali and the way the moves have been. What is your take in that case on valuations right now across market caps?
So we run a market timing model, which kind of looks at markets from a 1 to 3 year perspective. That model has been indicating a negative view on equities for a while, actually. So we've been going wrong there, though large caps haven't done much. And the model basically looks at 3 factors. It looks at earnings, it looks at valuations, and we have a sentiment factor to ensure that we don't sell early or buy early. Earnings are fine. Valuations are expensive. They are kind of in the 75th or 77th percentile. And sentiment is slightly optimistic. It's a contraindicator. So we're right now recommending a 20% underweight on equities on a 50-50 equity debt benchmark. That's as objective as I can get on the view on the markets.
Okay. On small caps in particular, the last time we had you on the show, we had seen a big run by then as well. And we were talking about how fund managers are having a bit of a tough time just deploying this kind of rush of money. A lot of funds have closed flows as well. Do you think that it's sort of entered a euphoric zone for small caps? And for an investor that feels like maybe they've missed out, is it best to wait for a bit? Because even now, even as we talk about the fact that valuations have run up, every day there's a new high being made on the index.
Yeah, so people like us have gone wrong here. We've been cautious on this for a while. I think last time we spoke was like a few months back. And I think the markets have done well. And if they've done better than what we were expecting, obviously the view hasn't changed. We're still negative. As in, we do think there is euphoria in the small cap space. Basically, there's 2 ways to look at it. One, we look at a top-down. So on the top-down approach, we basically just look at mean reversion between large cap index and the small cap index. And it looks like it's time to mean revert. And from a bottom-up basis, we are basically looking at stocks that we like. And we do think that a lot of these stocks are expensive. Okay. So flows are meaningfully positive, and I think that is impacting valuations for sure. And if you're buying a stock at a higher price, I think it will impact future returns.
So, yes, please go ahead.
No.
Okay, so that is one question that is on everyone's mind, because in October we did see inflows returning to large caps, and that could be a signal that maybe things are changing. But still, the mid cap and small cap flows continued at the way we've been seeing in the last couple of months. So what are you thinking of large caps? They are due for a catch-up now. Do you think the next year we'll see a bigger action in this pocket, or it has already started?
I don't know if it started. We do think that large caps are much better positioned than mid and small caps. And our view is that large caps will do better than small caps. So in fact, the large cap space hasn't gone anywhere. So from that perspective, there is a significant discrepancy in terms of where the market has moved and where it is not.
Let me ask you, are you expecting a big kind of correction to come through in the mid and small caps? Or do you think that we're just going to be sideways in this space for a while? How are you looking at it? Because, if you expect a sort of more significant cut to come through, yes, then someone might want to sit out. But if you just feel like it's going to be ranged at these higher levels, then it's not as scary to get in.
I think people think that we know what's going to happen. We don't.
Well,
So
we're
we've
asking you
been
because you probably know better.
No, clearly we don't. So the space is not corrected. We've been waiting for it to correct for a while. And I think it should, but it hasn't happened for a while. And what will trigger the correction? I really don't know. Because flows, I think, see, the problem with inversing the cause and effect is that then it becomes tough to predict. So flows should happen if expectations are high. Now, if you start mapping expectation based on flows coming in, then it's a convoluted logic. So I don't like to think about markets in terms of flows.
Okay.
It's at least tough to do that. So because you can't predict flows. And I really don't know whether flows will reverse, whether they'll continue. So I can't think of a trigger for the markets to fall. But I'm pretty confident that it will impact future returns. Because if you buy something at a higher price, which doesn't make sense to you from an earnings growth perspective or otherwise, then it should impact future returns. So if people are okay with getting lower returns, then I guess it's fine.
Okay.
They shouldn't be.
Okay, so the sum and substance of the last couple of questions that we have asked you is that, yes, small caps are highly valued. This is not a space that you would look at. Large caps could be the theme to watch out from here on. So quickly, if you can tell us, what is the valuation difference right now? Small caps right now versus what they were when they were not at peak or at average levels, and large caps, what are they at right now versus the peak levels that they were at? Like, what is the differential that you're looking at?
We don't look at these numbers here because even within the large cap space, there is a very significant, so the Nifty is trading at like 22, 23 times, but you have stocks that trade at 55 times and stocks which are at single digit multiples. Now that whole deviation is much, much higher in the small cap space because the whole space is kind of heterogeneous. Even the large cap space is heterogeneous, but they still have a lot more common characteristics than the small cap space. So we really do not look at valuations from that perspective. And the second reason we don't look at it is because you you have some sense on what the consensus is talking about on the large cap space. Whereas there are hardly any estimates for the small cap space. We have estimates for the stocks that we own.
Yeah.
So we really don't have numbers that are credible for the index. So we don't really look at aggregate valuations per se.
Okay, that makes sense. We're going to move away from this entire market cap talk that we've been doing to maybe some sectors and themes. Is there something in this market that stands out? You know, we've been talking about this big move in real estate, in defense, in, power stocks. So is there anything that you feel stands out now and that you would feel comfortable looking at even at these levels?
So we like financials. We liked financials a year back.
Yeah.
It's been actually the worst performer, honestly. But I think financials is a good sector to be in, one, because they are sitting on a lot of capital. We are kind of at the beginning of an economic recovery, and financials are pro-cyclicals in that sense. And the typical problem in financials is asset quality. And we are like, there is no asset quality issue because they haven't lent, and we're actually seeing money coming back. So that seems like a good space to be in, though. And I'm surprised that this sector is underperformed. Maybe it has underperformed because it was a consensus trade, but I would say it looks good on a relative basis.
Okay, I'm going to have to ask you to break this
I think
down a bit more. You're saying financials, but that's a very, very big basket, right? So is it the private banks, the PSU banks, the larger ones, the smaller ones? Are you looking at NBFCs? Take us through what you like within the financials.
So we own the private banks. We own some public banks too, public sector banks. On the NBFC side, we have some niche NBFCs where we think these NBFCs have competitive advantage. Like we own a lot of Bajaj Finance or Muthoot. So it's kind of, we own ICICI Lombard, which is into general insurance. We also kind of like life. So it's across the space, honestly. But the thesis that I talked about, where you can place size, was really the banking sector.
Okay, so that's
which is also a large part of the benchmark.
Yeah. No, absolutely, that is. And in the healthcare and the consumer discretionary, again, that also becomes a bigger basket. If you could break that down for us.
So healthcare and consumer discretionary again is a heterogeneous mix. So we are positive on it selectively. Whereas healthcare is more like a in the background of our cautious view on the markets. Healthcare is kind of stands out as a defensive. So so these are the three sectors. Effectively, let's say we are kind of positive. Industrials we've liked, but we think valuations have kind of gotten ahead. But we were happy to buy into industrials if they correct, because there is earnings compounding to be played there.
Okay, fair enough. Mr. Srinivasan, a lot of these new age platform companies, after sort of getting pulled down a lot, have now seen valuations correct a decent bit. They've started moving up again. Financials are looking a little bit better in terms of the earnings that they're reporting. Everything from a Zomato, PB, Fintech, Paytm. I know you can't sort of pick the entire basket, but is there anything in this pocket that you feel is okay to look at now?
So, again, they're all different. It's stock specific. We like some, we don't like some. We own a bit of Zomato. I think we like Nykaa. Our research team likes Nykaa. What else? We don't own Paytm. We don't own a lot of these others. So there is no, we didn't participate. We thought it was way too expensive. So yeah, so it's kind of stock specific, right? And it's really about valuations, I guess.
Okay.
So we don't have like a common view across platforms, because each business model has its own competitive advantage, or does not, for that matter.
So it's very stock-specific approach that you are taking with every stock that you actually get into your basket as well. And you spoke about your research team liking Nykaa. I think Pavitra and I like the products that Nykaa sells, so that just equates it there. But Srini, we'll have to do one thing. We'll have to get into a quick break. If I can just check that. That we can get into a quick break, and on the other side we'll continue our conversation as to how to look at a portfolio completely and what the valuations are looking like across the market caps. Just stay tuned. We'll come back in just a bit.